Good afternoon, everyone. We're going to give everyone a few minutes to go ahead and log in, and then we'll go ahead and get started. All right, today's topic is 11 tips on how you can grow and qualify your network of sponsors. The focus is a little more on syndications and how to find syndications. I'm real excited about our guest speaker, who is the CEO of Cash Flow Portal. What is a self-directed IRA? So all you newbies out there, if you've never heard of a self-directed IRA, self-directed IRAs have been around since the 1970s. Most people don't know that they can use their retirement money as well as health savings accounts and education savings accounts to invest into alternative asset space like real estate, probably being the most common asset. And I'm gonna go through a couple other things, but self-direction is the ability for you to direct your IRA to investments that you wanna make, things that are like brick and mortar, tangible assets, things that are outside of the stock market. So that's what self-direction is, and a self-directed IRA. So why would you want to self-direct your IRA? Well, it gives you an opportunity to diversify your portfolio. So not only do you want, maybe you have it in the stock market, stocks, bonds, mutual funds, the stock market can be volatile, but what I tell people is you don't want to put all your eggs in one basket. You do want to diversify. That way, if you break one egg, hey, you got some others that are still good. So that's one reason. Another reason are the tax savings. If you're making investments with cash right now, you're probably subject to capital gains tax if you're doing pretty well. You could do the same thing, same investments. You can do it in an IRA. Why would you want to do it in an IRA? Well, it might be tax deferred or tax free. Just really comes down to your strategy and what type of vehicle you're using, a traditional IRA, a Roth IRA, a solo 401k, health savings account. And I'm going to go through the different accounts and the reasons why you would want to use those accounts. And not only that, invest in things that you're already doing, things that you know best, something that you're a professional at. If you're a real estate investor and you're listening right now, and you're already doing real estate investments, why not do it in a retirement portfolio as well? So these are the type of plans that I mentioned. Your personal plans, your Roth IRAs, and your traditional IRAs. The only difference is they're taxed differently. Roth IRAs, you pay the taxes on the contributions or Roth conversions, and then it grows for you tax-free going forward. Roth IRAs also do not have RMDs, so you're not required to take those distributions once you hit a certain age like you are in a traditional IRA. So traditional IRAs are tax deferred, so making those contributions to the traditional IRA, it's gonna be tax deductible. And then, or if you have a previous employer 401k, which is most common, you can do a direct rollover into a traditional IRA. It's the same thing. It's usually pre-taxed dollars, and it grows tax deferred for you. Then you have your employer plans. You have your solo 401k. We call it a solo QRP here at NuView, Qualified Retirement Plan. You have your SEP IRA and your simple IRA. A couple differences there. The solo 401k, you must be self-employed with no common law employees. And solo 401k has some great benefits to it if you're qualified for that plan. If you were to make an investment into real estate and you needed to borrow some money, some leverage, a mortgage loan, some type of a loan to buy that real estate, if you did that in an IRA, you might be subject to a UDFI tax. So you're paying taxes on the leverage portion of your profit. However, if you do the same thing and you take some leverage out with the solo 401k, you bought that real estate, you're not subject to that UDFI tax. That's something to consider if you're self-employed with no employees. Then you have your SEP IRA. That's great for small businesses. The way that works is it has high contributions similar to the solo. You can contribute up to 25% of whatever your gross income is at the end of the year. Maximum for the SEP IRA increase for 2022, it's actually $61,000 a year you can contribute to that plan. It's a good chunk of change right there that you can put into a retirement plan and start investing in some of these alternative assets. If you don't have one yet, talk to your CPA, see if you qualify for the SEP IRA. And then you have your simple IRA, also great for small businesses. The contribution limits aren't as high as a SEP IRA, but it's great because there's an employer match component in there. If you have employees, you can match up to 3%, and you can contribute up to $14,000 yourself. Then you have your special plans. So if you have a health savings account or a high deductible health care plan, you might be eligible for a health savings account. You can contribute about $7,600 if you have a family plan, $3,600 if you're by yourself on the plan. And that is a really powerful plan to have. And I'm going to tell you why, because it can be self-directed. Most people don't know they can invest this money. So it's not only meant for your health benefits, but the way it works is it's tax deductible going in and it grows tax-free coming out. So when you do have those health expenses and you're ready to take that money out, you just save those receipts and invoices from the doctor. You can use it for all kinds of things, like, if you just go to a Walgreens and you're buying medicine, that counts towards the health savings account. And then you can take that money out and reimburse yourself. But the best way to grow that is to invest it. Let that money keep working for you. Partner with some of the other accounts that you already own. Then you have your Coverdale savings account. This is not a 529. This one's a little bit different. The best thing about it, it can be invested. It's great for any kids or grandkids. And then you can contribute $2,000 a year. It's not tax deductible. However, paying for college is tough. I know myself, I'm still paying for college. I'm probably going to be paying for college the rest of my life. But, if I had a plan like this, an education savings account, when I graduated from high school, a lot of my expenses would have been paid for already. So this is a good plan to look at to start saving for your college for your children or grandchildren. Now, these are the most common types of assets we see clients invest in. So you have your real estate. When it comes to real estate, there's a wide plethora of different ways you can invest in real estate. Whether you're a passive or active investor, you could have a rental property, you could have a short-term rental. There's tax liens, there's apartment syndications, you have real estate option contracts, condos, commercial property, offshore real estate. So you can invest in real estate even if it's not in the United States. You can still purchase real estate. That I get clients buying things in Costa Rica and Belize, Nicaragua, all over the place. Most people don't know they can do that with their IRAs. And then you have your promissory notes. Notes are second most common to real estate. And what a note is just like a mortgage loan, but except for you're the lender and whoever you're lending to, that borrower, usually it's for real estate related. So it's secured by a piece of real estate if you're doing a secured note, and you get to negotiate with the borrower on what the terms of that note look like. So that's how a promissory note works. Then you have your unsecured notes. So that means it's not secured by anything, any assets. Usually you can charge a higher interest rate if it's unsecured. You definitely want to do your due diligence on the borrower before you lend the money. One best practice I did learn, and I've been telling everyone since I learned about it, is don't loan if you don't plan to own, and that applies more to the secured notes. So if you're lending on a piece of real estate and that borrower doesn't pay you back and you need to foreclose on that property, well, make sure you want to own that property, because your IRA might end up owning the property versus getting the interest that you're planning to get from the note. So then you got private entities. That's investing in anything like LLCs, joint ventures, trusts, Reg Ds, startup companies, things like that fall under the private entity world. Cryptocurrency, we're seeing a lot of clients that like cryptocurrency right now. That's a trendy topic. It's one of those things, kind of like the stock market, though. You can't really predict where it's going to go or how it's going to perform. But if you like crypto, you can invest in crypto. There's a couple different ways you can do it. We have a couple brokerages, or you can create an LLC and then pick whichever brokerage or trading platform you want to use to own the crypto. The only things you cannot invest in are collectibles and life insurance. So keep that in mind. Just a disclaimer before we get started with our presentation. NuView, we are just a custodian. So we're kind of similar to like a Fidelity or Charles Schwab, except we're not financial advisors. We don't tell you, where to put your money or how to find the investments. It's really up to you to find those investments, and then you let us know what you would like to invest in. Schedule a consultation with one of the IRA specialists. If you have questions, we're happy to answer those. We can go over what the rules are so you don't break any of those, keep things, within the IRS guidelines. That's what we're here for. All right, so I'm really excited to introduce Perry Zhang. He is the CEO and owner of Cashflow Portal. He's going to give us a little demo of the Cashflow Portal as well. Hey, Perry, how are you today?
I'm doing well. Thanks for having me here.
Yeah, Perry and I met a few months back. We were both at a multifamily syndication conference, and he was like, "Hey, I love to put Cashflow Portal on your platform so I can teach people more about how to find syndications. There's not really anyone out there doing this." So I was real happy to bring him on. So Perry, we're real excited to hear what you have to say. Go ahead and take over.
Sounds good. Thank you. I will share my screen. Cool. Hello. Welcome to the NuView webinar on 11 tips on how to grow and qualify real estate syndication sponsors. Thank you for spending your morning with me. The webinar will be about 25 minutes, and we can make this interactive. So you can ask me questions throughout the webinar. For questions, you can type it in the Q&A section. For the audience, we assume you are a limited partner, LP, with a reasonable amount of real estate knowledge. Finally, my goal is to inform and share with you lessons I've learned over the years, both as a general partner, limited partner, and as a startup founder in real estate syndication. My job is to give you information so you can become a stronger and more astute investor. With that being said, let's get into it. Agenda for today. I have a few foundational tips that set the framework on how to look at real estate syndications. I will talk about tips to vet sponsors themselves and what I see as traits of the top 10% syndicators. I will talk about tips to vet the deals themselves. I'll talk about how to find and grow your network of such sponsors. And finally, I'll share some parting thoughts and answer more questions. Again, my name is Perry Zhang, and I'm the founder and CEO of Cashflow Portal. I was an engineering manager at Lyft for 6 years. And before that, I was a software engineer at Twitter and Amazon. I graduated from Duke in 2010 with a bachelor's in economics and computer science. I am also a real estate syndicator, having amassed 850 units and raised 20 million for my own deals. I am friends with at least 2,000 syndicators just like me and have shaken hands with at least 3,000 syndicators at this point. It's through these experiences and my company that I got to see what makes a real estate syndication deal successful. First, let me set the framework on how we think about real estate syndication. Real estate syndication is the process of putting money together to buy a larger real estate project that a single individual can buy on their own. It consists of two groups. One group is the general partners or syndicators or sponsors who do all the work. The other group is the limited partners or passive investors who simply invest money and enjoy the upside. The heart of real estate syndication is the quality of the syndicators. So the first tip is that syndicators are more important than the deals. The competency, passion, and integrity of the syndicators determine the success of the deal. A great syndicator can turn a mediocre deal into a good one, and a good deal into a spectacular one. Real estate is not a creative industry. The jockey is 100x more important than the horse. Access is key and is probably also the biggest barrier. One hasn't heard of real estate syndications often because 95% of them are done through 506B offerings. Under SEC regulations, 506B, the investor must have a pre-existing substantive relationship with the syndicator. That's why it's often referred to as friends and family race. These days, investors meet syndicators through conferences, mentorship groups, and their local meetups, where they develop such relationships. 506B only started in 2013 and wasn't recognized by the SEC until 2015. It's only a 7-year-old industry. The reason you may feel like real estate syndication is hard is that you don't have enough access. What LPs are really looking for is more deal flow. Tip number 3, spend time educating yourself. Every industry has its own language, and real estate syndication is no different. It does take some time to familiarize yourself with the jargon syndicators use. I would say it takes about 2 days to learn the basics. Most of you have invested passively already, so you are past that. To put things in perspective, 56% of the US population invests in stocks, but what percentage of them know what EBITDA is and how it relates to the share price? I will say less than 1%. I will venture to say that you have more transparency investing in a real estate syndication than investing in stocks. To go beyond basic understanding, take the syndicators out for coffee. You will learn more in a one-on-one setting from the syndicator than watching a lot of webinars yourself. Second, do invest with multiple people. When you invest with a syndicator, you become part of their investor network, and you can definitely ask for 30 minutes of their time on the phone or coffee. Now that we cover foundational tips, which is to say syndicators are more important than deals, access to syndicators is key, and it's important to spend time educating yourself. Let's talk about tips for vetting syndicators. One of the questions I get often through meeting thousands of syndicators is what separates out a top 10% syndicator versus everyone else. When I was starting out as a syndicator, I didn't have enough context to know the answer because I had a small sample size. Over the last 2 years, I gotten to interact with 1,000+ syndicators, and I am able to form a stronger opinion on what makes great syndicators stand out. The first thing I'll say is that great syndicators execute. And I'll be very specific about what this means. When I meet syndicators for the first time, I withhold my opinion of them. When I meet them the second time, I measure the progress they made from the first time to second time. The velocity tells me a lot about how successful they will eventually become. A great syndicator is someone who say they are gonna do something, and the next time I talk to them, they have done it, learned something from it, and moved on to the next thing. They don't get stuck in the execution phase. It doesn't mean what they do is always correct, but it does mean that they are constantly making progress. For example, during my first meeting with the syndicator, they might say, I am starting in multifamily and I just joined this mentorship group. I'm a doctor by trade and I'm busy, so I'm gonna help people raise money and be a co-sponsor. 10 weeks later, on the second meeting, when we catch up, they will say, I have a short list of lead sponsors that I can work with. And I have interest from 10 investors who have told me over dinner that they will invest if I have a deal today. That's progress. The second trait, really deriving from the first trait, is that execution breeds formidability. Great syndicators are formidable. When they say they're gonna do something and do it over and over again, people come to respect them. You treat their tasks with respect because you know they're gonna do them. You treat their goals with more respect because they may actually achieve it. One of the investors I know, we're getting dinner and this person came in saying, I was listening to a webinar by this other syndicator, and you know, they're extremely high pitch. And I had to lower the volume just so that he doesn't scream into the microphone. When I asked if he will invest, he said, absolutely. His high pitch and everything, but he's an excellent executor. You probably have all met those syndicators in your life. They demand your respect despite their quirks. You know they will execute, and you have seen them grow in front of your eyes. A great syndicator also communicates. They communicate in a way that's compelling and clear. They are able to explain the business plan in simple sentences without fluff, so you can easily understand what you're getting yourself into. They also communicate with high integrity. They don't try to hide the risk. When you talk to them, you understand what is the upside and what are the potential gotchas. For example, one of the big things nowadays is bridge loans, that they provide higher leverage, but also interest rate uncertainty versus agency loans. A good syndicator understands that's a risk and explains the trade-offs going into it. Finally, a great syndicator is responsive. I will say one of the greatest things about investing in a syndication is that you can personally talk to the person that's managing your money. If that syndicator disappears for days after taking your money, that's a yellow flag. Did I also mention that competency is important? Some syndicators start off well, and when they have more deals, they get in over their head and they become busy. They don't know how to scale. When that's the case, it may be time to look at a newer syndicator. One practical tip about being responsive is how quickly they respond to your questions about K1s, how quickly they respond to your questions about a specific deal, and how detailed their answers are. A good syndicator cares about the customers, who are you, the LPs. To recap, there are 4 tips for vetting great syndicators. Great syndicators execute, resulting in formidability. They communicate with high integrity, and they are responsive, showing that they care. Let's talk about tips for evaluating a deal. Terms of the deal are a reflection of where the syndicator's head is at. For example, how much money the sponsorship team is investing is an important part of the deal. Other things include how much are the acquisition fees, splits, waterfalls, and disposition fees. There's no causal relationship between the terms of the deal and the eventual outcome. In my experience, I can only pattern match between bad deal terms to undesirable performance. All things being equal, here is a typical deal with good terms. 1% acquisition fee, 80-20 straight split, no waterfalls, no disposition fee, and sponsorship team is putting down 10% of the required equity. Here is a deal with not so great terms. 2% acquisition fee, 8% preferred return, but after that is 60-40 split. Then when the IRR of 16% is achieved, it becomes 50-50 split, 1% disposition fee, and the sponsorship team puts down 2% of the required equity. Here's a general rule of thumb. When the terms are so complicated, it's not good. The syndicator does not have to do that. When they do that, it means that they're haggling over every penny and dime. Syndicators, like I said, define the success of the deal. Terms of the deal are not bad on their own. They simply are a reflection of what kind of syndicator they are and where the head is at. I hope that makes sense. Now, tip number 9. The professionalism of the webinar slides and the presentation matters a lot. A good presentation shows the syndicators care about their deal and have prepared for it. A half-done presentation means that that's the same attitude that the syndicators will have when it comes to managing your asset. This also extends to emails and text messages. Finally, tip number 10. The best deals prioritize growing together over absolute returns. When you are evaluating a deal that projects 8% cash and cash return and one that projects 6% cash and cash return, do not necessarily choose the one with 8% because it's higher. No deal goes exactly according to plan, and no syndicator underwrites exactly the same way. In fact, I will say go with the one with 6% cash and cash because that most likely has a more conservative sponsor. When I invest in deals, I almost always invest because I want to develop a long-term personal relationship with the syndicator. For example, I want to potentially work with them in the future, or they are a developer and I want to leverage their knowledge for my residential properties. To recap on tips for vetting deals, simpler fee structure is better. This relates to the syndicator's integrity. Presentation and professionalism on the webinar and emails matter because that relates to syndicators' conscientiousness. And finally, prioritize relationships over absolute returns. Generational wealth is built when you have a long-term view. So how do you find such syndicators? The answer is you can find them on cashflowportal.com/marketplace. Cashflow Portal Marketplace is an educational platform that connects investors just like you directly with vetted syndicators. When you visit cashflowportal.com/marketplace, you will get access to a wide network of sponsors across the US with different specialties and focus markets. In our increasingly digital world, this means you can make those personal connections even if you haven't had a chance to physically meet in person. It is the only investor portal that also has a marketplace, which allows investors to find both 506C and 506B deals. And nothing beats personally meeting the sponsors who will be managing your money. So you can go to cashflowportal.com/marketplace to learn more. Finally, my last tip is as a bonus tip. Show support to sponsors. When you receive emails from sponsors on monthly updates, reply and tell them what you like about what they're doing. Sponsors personally read those emails, and what you tell them goes a long way. Most of the time, sponsors stress more about those emails than the LPs do. So when you show support and appreciation, sponsors remember, and they will be sure to tell you about their next awesome deal. And that's it. I will open up for more questions.
Hey, Perry. Did you want to give us a quick little walkthrough demo of the Cashflow portal?
Absolutely, I can certainly do that. Cool. All right, here is a tour of Cashflow Portal Marketplace. When you're on this page, you can see the open investments. There are 506C deals. Underneath that, you will see sponsors that have both 506C or 506B. You couldn't see the 506B deals because that requires a pre-existing relationship. So you have to connect with them. Before you connect, you can read up on their track record and biography. So for example, I can go into, say, Ree Goossens. I can see that Ree is looking for an investor, and these are some photos about him, some about, and these are all the sponsored deals. He also has an open investment. These are the sponsored deals with their track records and a short description about each deal. If you found that to be compelling or they're focused in the same markets that you're interested in, you can go to the top and click on connection level, fill in what is your current connection level with them. For example, you may already know them or you met them once in a real estate conference. You add a personalized message and you click on connect to invest. What happens then, it will be added to the syndicator's investor database. And from that point on, they can set up a call with you. And after the Zoom call, or maybe 2 of those, 3 of those, when they have a new deal, you will be alerted of that new deal. Okay. To find the people that you're connected to, you can head over on the left-hand side, connections. That shows all the connections you have. This is my test account, so I only have 4 connections. So for example, I am connected to Nelson and I have a substantive relationship with him. So when he has a new deal, it will show up here, okay? And because Cashflow Portal is an investor portal that also does the logistics of investing, which you can invest with the IRA, that's one of the profiles can use. It is a one-stop end-to-end solution going from discovering new syndicators, establishing that substantive relationship with them, to finding out about new deals and investing in the same portal. Any question? Oh, I got a question here. Does it cost anything to connect? And how do I know which syndicators best to connect with? Should I look at ones that are near me or the ones with most experience? Wow, that's a great question. So it does not cost you anything to sign up and connect. You can connect with as many people as possible, and it's completely free, okay? Who do you connect with? Yes, one of the things is you go on the filters and you will look at location, and you will put in the locations in which you currently live. So for example, I live in Seattle and there are only 2 people here in Seattle. But if I say I want to look at people who want to invest in Dallas, Texas. So I have Houston, I have Dallas, and I also have Austin, Texas here, okay? So when I do that, then there will be a lot of these people that are investing or syndicating in the areas of your liking, all right? Now, let me read a little bit more of that question. Great question about should I connect with the ones with most experience? So each one of those indicators, they have certain stats to it, right? Like how many sponsored deals, portfolio value, and passive deals, okay? This is my contrarian view. It turned out that the people who have the most number of deals, they have more experience. It doesn't mean they are always better. In my personal experience, this is anecdotal, not scientific, first-time syndicators are amazing syndicators. Why? One, they put more money into the deal. They have better fee structures. They know that if they don't do well, they are out of the arena. And they only have one deal. So they have all their time focused on that one deal. They are more responsive. And it turned out that some of the best deals that I invest in personally are people's first deals. And I love seeing investing in people that went from 0 to 1.
I have a few questions myself. So is there any background checks or due diligence done on the syndicators?
Yeah, great question. There is background check done on these syndicators. So we know that they are true syndicators, and they are also people in the syndication world. It's a small network. People know each other, so they can verify. And then the next question is, does the platform verify what they say? So here's the approach we took. We allow the passive investors to flag when they see incorrect information. That is a more sustainable and scalable way to grow the ecosystem.
Okay. Yeah. And then where would they find, if they want to just maybe review like the subscription documents, where would they see those?
Great question. So if I go into syndicating, and now we're getting into the investor portal realm. So on the offering document, they can copy this link, and this is what the investors will actually see when they're looking at an offering. Okay, this is what that looks like. They can also view that on mobile. So this is what the mobile view looks like, right? You will see here that there are some photos, some projected returns, some metrics about the offering. At the bottom, they can see that there is sample offering memorandum, and they can click on this preview icon to look at the empty subscription document. Once they're ready to invest, they can click on invest now. And from their point on, they can create a profile, select the sponsors they want to invest with, put in the investment amount, click on next, and they can actually have this thing called investor questionnaire, which used to be very painful where they have to type it in the document, but because it's all digitalized, and so they can put in the information about themselves, such as their LLC name and so on and so forth. Then they also mention their relationship with the sponsor. For example, their colleagues or friends, or they have invested previous deals. And then next one is how they are accredited. They can say I'm accredited based on net worth and income, or if they're not accredited, at the bottom, they say not accredited, there will be more questions to ask how they are not accredited, right? But if they select not accredited, the rest of them will be grayed out. So this is very user intuitive for the LP. And then finally, if they're investing with a trust, for example, you will ask a question about is the trust revocable? If it's LLC, we don't even ask that question. And then finally, they will just sign the document directly on the website.
Interesting. And if they're using an IRA?
If they're using an IRA, they will sign their portion. They will download the entire document. They will give it to the IRA custodian. The IRA custodian will sign it and then email it back. And then the syndicator will upload it back into the portal. We want this to be a centralized source of truth or a system of record for both the syndicator and the investors.
Okay. And I noticed it's all docu-signable, right?
That's correct. Yeah, that's exactly right.
Love it. Okay. It looks like there's a question. What does sponsored units and passive units mean?
Yeah, great question. So sponsored units, that's a great question. Like sponsored units means how many units that the syndicator has sponsored, whether co-sponsor or less lead sponsor. Passive units means how many units they passively invested in. Yeah.
Great question. Anyone listening, if you have any additional questions, go ahead and type those in the chat area or the Q&A, and we're going to read those off for you. So my next question for you is, if somebody was going to maybe they wanted to, because a lot of these offerings you have to know the person, so how would they be able to connect and find out if maybe there's a conference or something? That's how we met, was at a conference, and now that I'm networked with a ton of syndicators there, and now I could potentially invest in their offerings, right? Do you have any section in there that shows what's going on in the syndication world, where maybe they maybe want to do some type of an investment, but they just don't know the person, so they're not able to do it? If it was like a, what do you call it, a Reg D?
Yeah, that's right. Yeah, so great question. We really try to do to help the LPs get more access and build more trust to the people they invest their money with. One of the ways is to go to these conferences, and towards that end, when you log in, and this, by the way, this is absolutely free. You can find out all these conferences by going to events on the left-hand side. These are all the conferences that are coming up. We scout the internet to find all the multifamily and real estate conferences there are, and we put them on this website. This is all the conferences happening this year.
Okay.
And if you are interested in any one of them, you can click on view details, and you can go to that conference's specific website.
Wonderful.
Yeah.
The next question, is there a fee for using this portal? You said there was no fee for it?
There is no fee for the LP to using the portal. Yeah. Some questions, some people might ask, so how do we make money, right? For example. So syndicators pay us a SaaS subscription fee in order to use the software to manage their deals and investors, right? That's their own investors. When they have new investors come in through our marketplace. What we do is we say, if your deal is successful, we will be a part co-sponsor on your deal. We don't take money off the table. We don't take a transaction fee or anything. We also don't say, you pay us, we'll put your profile toward the top. We definitely do not do that. We want that to be a fair system where everyone can see fair information. What we do is we as a company invest of being a co-sponsor on the deals in which we partner with.
Oh, okay. I love that.
Yeah.
Is there a minimum amount of money to invest for the passive investor? So I think every deal is different, correct?
Yeah, every deal is different. I believe in real estate syndication, 25,000 is the minimum, and most deals want 50,000. But if you ask, usually 25,000 is okay. Yeah.
Yeah, and can multiple say it's a husband and wife, maybe they don't have enough, but they partner their IRAs on the same, investment to reach that 25 or that 50 minimum goal. Can they do that?
Yes, absolutely they can. Yeah, for sure.
Yep. So the person that asked that question, that might be a good strategy if you don't have that minimum. You are either accredited or non-accredited. You could partner with other people. That way you can reach that minimum amount of money and use your IRA to be able to make this investment. Awesome. Any other questions out there? Anyone that has interest in learning more, we do post all of our recordings on our website and our social media. You can find us on YouTube, our Facebook page, or our website, NuViewTrust.com. If you would like to set up a consultation, you can email us at IRA specialists. It is plural. It does have an S at the end, at NuViewTrust.com. And this is our social media. If you want to scan that QR code right there, take you straight to our social media. Please follow us on YouTube so you can stay up to date on any new content we're putting out in the world. And lastly, it is May. We aren't running any promotions right now, but if you call us and you're opening multiple accounts, we can definitely work with you. There are some promotions left over from last month we can still honor. Just reach out to IRA specialists at NuViewTrust.com. And I don't see any other questions, Perry, but I do appreciate you taking some time to spend with us and educating people on some due diligence, some good tips, as well as showing them what the cash flow portal looks like. That's an awesome site. Anyone that wants to learn more, you can also reach out to Perry directly. What's the best way to reach you, Perry?
Yeah, the best way is to add me on cashflowportal.com/bio/Perry Zhang. You can find my track record there and you can connect with me and you will send an email to both of us.
All right. Awesome. Well, thanks everyone for joining us today. We look forward to seeing you next week, 1:00 p.m. Eastern Standard Time. Have a wonderful rest of the week.